Good morning, everyone, and happy Monday to everybody. This is Tony Butler with Insurance Agency Marketing, and I have Kip Walker on the line as well with Mutual Trust Life, and we're going to discuss infinite banking concept with Mutual Trust Life. First and foremost, I want to thank you guys for joining our webinar this morning. I do want to apologize for the slightly late start here. We were having some technical difficulties, but we've got those ironed out. So what I'm going to do is I'm going to go through our introduction slides here at IMES rather quickly so we can get into the meat of the webinar, which is the infinite banking concept. So again, thanks for joining. Um, First off, we do have IMES Business Builder. This does help increase your capital. What this is a referral bonus program that we have set up for our agents. So if you do refer an agent to IMES and that agent does get appointed with one of the carriers that we work with, we do provide you with a $50 referral bonus. Any subsequent business that agent writes, we do provide you with a 20 basis points bonus as well. It doesn't take away from their commissions. It's just our way of saying thank you for helping provide additional business to IMES. If you have any questions regarding our IMES business builders, please feel free to give us a call. Next, we also have the new producers builders. This is for our new agents' first 180 days of being appointed with us. We do have several levels of paid premium bonuses that we provide for you. So we have the 100, 250, 500, 750, and $1 million levels. Those levels give you the ability to earn additional perks, if you will, for producing business. If you have specific questions in regards to how to grow your production, what we do offer as far as the premiums that are paid in to you as an agent, feel free to give us a call. Any of our sales directors would be more than happy to discuss this with you in greater detail. We also provide you with back office support. Back office support here at IMES is to help you work smarter, not harder. One of the things that is huge for the agents that we work with is paperless contracting. So if you've ever filled out contracting paperwork for a carrier, you know that that can be painstaking, time-consuming process. We give you the ability to do all of that online. We do have access to forms for you for carriers, as well as you having the ability to do life and annuity quotes. So any questions as far as our back office support, please don't hesitate to give us a call. With the current pandemic, COVID-19 going on, a lot of agents are not having the ability to sit in front of their clients. So we do support um, electronic applications through a couple of platforms, one of which is Firelight. Firelight, you can get registered through our website. And as you see here, here are the carriers on the left that are available through Firelight. And we've got carriers coming soon on the right. This gives you the ability to submit those applications via electronically. If you haven't registered for Firelight, I would highly encourage you to. Again, you can do that through our website. We can walk you through the process of registering. Just don't hesitate to give us a call. We also have a creative marketing solutions department, and they help you whether it be turnkey, digital, or agency solutions. So if you're looking for personalized flyers or handouts, or if you're looking to get into the digital marketing space where you're looking for a logo design, our creative team can help you with that. Feel free to call our 800 number, ask for Jacob or the creative marketing department. Any one of our designers can provide you with additional information and assistance on that. Our second platform available for electronic applications is through the IMES website. It's through iGo eApp. So as you see here, our website is www.imesinc.com. And on our website, we have a lot of tools available for you, whether it be term quoter, universal life quoter, forms that you can access online. If you're an annuity producer, we do have Annuity Grid, current annuity news, as well as long-term care. If you're a life producer, we do have carrier information on that, especially with the COVID-19 pandemic that we're dealing with right now. A lot of agents are asking if carriers are taking individuals, whether it be because of age or health conditions. We do have COVID-19 update underwriting information available on our website as well. If you need someone to help you navigate through that, give our life department a call and we'd be more than happy to help you with that. We also provide you Retirement Analyzer. This comes with the 30-day free trial basis. Once you are a producing agent, if you're producing 250,000 of annuity production or single premium life production, it is available for you free of charge. There is a cost that we can provide you with additional information on that. Just give us a call. But the Retirement Analyzer helps you answer questions from your client, such as, can I continue my present standard of living into my retirement years? How would it affect my family if I were to die prematurely? Questions like this, this analyzer can help you answer those questions for your client. So if you'd like additional information on that, give us a call. We also have IAMS Wealth Management Team, and the Wealth Management Team is there for you, the agent for your higher net worth clients, those individuals that have income, higher investment income, or revenue, I should say. We can definitely help you increase your revenue as an agent, improve your client retention with your clients, and strengthen your client relationships. So if you want to give Charles Jr. Call, or anyone on the IAMS Wealth Management Team will be able to help you and walk you through what they can do for you. We have Life and Annuity Academy that we try to do once a quarter. Unfortunately, with the current pandemic, everything's pretty much on hold. However, for those of you that don't know, it is a 2-day training that we pay for, whether it be your travel, lodging, your food. Right now, we don't have information on if we're going to do one this year. As it stands, I think for 2020, it doesn't look like that's going to happen. Really don't know about 2021. However, if you would like some additional information on the Life and Annuity Academy, I do have a polling question here. We get you additional information, and as information is available to us as far as doing another Life and Annuity Academy, we'll definitely get that out to our agents. So I'm gonna put this polling question up here. If you just want to respond to that, be more than happy to get some additional information out to you. So I'll leave this up for a little bit. Okay. We'll go ahead and close that out. A couple more slides here. There's a couple of trips that we have on the books for 2021. As it stands right now, we still have those on the books. So the first one is IAMS Marketing Summit, Paradise on the Pacific. It is March 7th through the 11th, 2021. It's going to be in Puerto Vallarta. The qualification period is from July 1st of 2019 through December 31st of 2020. The qualification requirements are 3.5 million points. And then we also have the IAMS Elite Summit, Shores of Serenity, which is March 11th through the 14th in Punta Mita. Qualification period is the same time period. Minimum qualifications is 6.5 million points. 8.5 million points get you both trips. If you would like more details in regards to the trips, or if you've qualified or where you're at in terms of qualification, please give us a call. I'd be more than happy to answer those questions for you. So with that, I'm going to pass this over to Kip, and he's going to discuss Mutual Trust Life and Infinite Banking. Kip, are you there?
I am, sir.
All right.
Thank you very much.
Let me switch you over to be the presenter. There you go.
All right. Okay, well, I guess I'll just go. Thanks everybody for having me on. Thanks, Imes, and thanks Tony for hosting this call. I really appreciate you guys taking time out of your busy schedule to learn a little bit about infinite banking and mutual trust life. So I would ask that you please take notes, ask questions through Tony. I think through the chat box is a good way to do it. And think of some individuals that maybe fit the profile for infinite banking, which there are many, or there should be many. Um, Write their names down. That'll be our basis for moving forward and making this time valuable and productive. And it's also a great way to learn about mutual trust and introduce whole life into your portfolio if you haven't already done so. So we'll take a look at infinite banking, learn a little bit about it, who our client is, and then how mutual trust supports infinite banking. It's not how much money you make, but how much money you keep, how hard it works for you, and how many generations you keep it. That's Robert Kiyosaki, and I really like that quote. It encapsulates what the infinite banking concept is about and what mutual trust is all about, building that generational wealth. And he's the Rich Dad Poor Dad writer, and has a lot of great stuff in there. The infinite banking concept is not new. It's been used by people in the past. J.C. Penney, they met their payroll during the Great Depression with it. Disney World or Disneyland was started by Walt Disney with a whole life policy because he was all tapped out on his creditors. Couldn't get any capital, so he was able to use his life insurance policy. Ray Kroc started McDonald's, and Doris Christopher started Pampered Chef in her garage using a policy loan. So definitely not a new concept, but what we have done is we partnered over a decade ago with Nelson Nash. He's really the individual who popularized the concept and brought it to a broader market. And what it is, it's a financial principle based on U.S. tax law and insurance contractual guarantees. Well, what does that mean? That doesn't really tell you much. In a nutshell, the infinite banking concept is a pool of capital that can help you reduce your taxes and the interest that you are paying away from yourself unnecessarily, and recoup it and put it back in your own pocket. That's what it is in a nutshell. It doesn't do it justice. There is a lot of additional benefits that you receive. Obviously, the life insurance is important, but that's basically what the infinite banking concept is. So what it does is it provides access to capital, and access to capital is key for financial prosperity, whether you're a company or a business. Think about times in your life where things aren't going so well and you need access to capital. Banks really love to give you money when you really need it, right? Not really. They love to give it to you when you don't really need it. So having a guaranteed access to a pool of capital is very important for many reasons: for emergencies when you get sick, to expand your business, to ride out a pandemic, whatever the case may be. Access to capital is important. So where are clients keeping this capital right now? Are they keeping it in an instrument that is liquid? Can they get to the money when they need it? Is it guaranteed? And what good is it if it's not there when you need it, right? So you need to know it's going to be there. It's got to be guaranteed. Is it taxable? Are they, trying to build their wealth with this financial headwind of taxation every year, getting a 1099? Is it leveraged? Is it doing anything else other than just earning some interest? Will it grow when they use it? And that's really just referring to the strategy of infinite banking, and we'll talk about that. So where are they keeping it? They're keeping their money typically in CDs, right? Certificates of deposit, savings accounts, money market accounts, maybe some in cash, but these have limitations. A CD can have some limits on accessing it, and you give up your interest, right? If you take the money out too early. Plus, really, what are you getting? You're not getting anything but maybe a little bit of interest on it, right? And that's okay. It's safe. They know it's going to be there. It's doing what they want it to do, but it's not providing any additional benefits. And they're getting, a 1099 every year, and they're paying Uncle Sam for that little bit of interest they're earning. So the proposition is that whole life insurance is a better vehicle. It's not that you don't want those other instruments. It's just that this is an additional instrument that everyone should have as a foundation of their financial plan. And whole life insurance provides those guarantees, and it's going to be there. It's going to grow. There's a lot of times I get a little bit frustrated when people quote interest rates on policies and things like that. Well, I get a guaranteed 1% or 2% or 3%. That's only half of the equation. All right. With whole life insurance, you not only get a guaranteed rate of interest, you get guaranteed cash growth, because 4% times zero is still zero, right? You get that cash value growth, and that's really what Mutual Trust focuses on with our whole life product that we use for infinite banking. It's called Horizon Value. It has the highest early guaranteed cash value in the industry, bar none, and that lends itself very well to the infinite banking concept. Plus, you add the most flexible paid up additions rider on top of that. Hopefully, you're familiar with paid up additions riders. They're like very cash rich riders that you put $100 into it, you're going to see $94 immediately in the cash value, no surrender charges, and that grows by 4% as well. So cash value grows very quickly. So these are all very key components of the infinite banking concept, having a product that you can fund very heavily with a high cash value. But the other part is how we let you use it, which is the ability to get those loans as quickly as possible. So, whole life is important, but it's not just about just whole life. It has to be a special design, and you have to be able to use it in a certain way. And that's what Mutual Trust is really great at as far as the infinite banking concept goes. So you have that liquidity that you need, and you can take the money out, and it grows tax-free, which is very important to again, take away one of those headwinds to building our wealth, taxes and interest. And so whole life insurance, they've tried to get to it in the past as far as taxing those gains, but and I'm sure they would love to, but it hasn't happened yet. And even if they did, it would be grandfathered in. So if I was getting worried about them actually doing it, I just want to buy as much life insurance as possible, because they'll probably grandfather in any taxation in the future. But anyway, that's a side down the rabbit hole a little bit there. So what are the problems that infinite banking deals with? Well, we already said, business owners need access to capital, and so they have a problem. We need to point out what that problem is, what their issue is. Otherwise, what good is the solution, right? They don't understand they have a problem. Well, they do have a problem. They have debt. How are they going to take more control of that debt and get out of that debt and pay less interest? How are you going to deal with limits on qualified plans? You have 401ks, and they're great, and everybody should use their 401k and max out on the match and things like that. But how do you really win with a 401k? You win if you take money out at a lower tax rate than when you put it in. So, we're 5, what is it? It's growing so fast now I can't even keep up. What is it, almost $30 trillion in debt now? And, taxes are pretty low right now. Are they really going to be lower when you retire? So let's take some of that qualified money, let's redirect it somewhere where taxes are not part of the equation. How are we going to cope with emergencies? How are they going to cope with emergencies when they arise? Like I said before, when we actually need money, a lot of times it's very difficult to get a hold of it. How do we just keep more of what we make? And that goes back to the interest and taxes that we're paying away. So when we're talking about all these problems, they're really part of a bigger problem that everyone is facing, and that is, how do I save for retirement? That's the big issue. How do I save for retirement? And also, by the way, I'd like to help my kids go to college. All right, I'm a father. I have 2 kids, so one is about to go to college, and I'm doing everything I can to help her go to college. As long as I'm alive, my kids are going to have the safest car I can provide, and we're going to, have the best house we can live in. She's going to go to the best college I can afford. So that's just how I am, and I think a lot of families are like that. They want to do what's best for their family, and so that is the issue that we're all facing. How do we save for retirement, help them go to college, and do all this other stuff with all these financial headwinds? And the infinite banking concept can help them do that. I already mentioned interest, and as you can see from this chart, interest is a huge financial headwind for families. 34.5% of every dollar that is spent goes to pay interest for cars that you buy, your house, your mortgage, just everyday living expenses. And then we have about 5% or a little bit more that the average family can save. And so when they're going to talk to a financial advisor, they don't want to hear, well, you got to save more money. They're already doing that. They're already doing what they can. We need to be able to find that money for them, and we can do that. We can look at how they're funding their their life, their finances, their insurance, their how they're funding their 401ks. We can find that money and we can redirect it and put it into something that's going to not only um, build their wealth, but reduce the interest that they pay and reduce the taxes that they're paying as well. That's really a big part of what we're doing. And when we talk about interest, it's not just the interest rate, it's the volume of interest. When you look at the monthly payments that we have for cars and credit cards and mortgages, the volume of interest that we're sending out the door every month is incredible. 30% of every car payment, 40% of our credit card payments, 83% of our mortgage, especially early on, all going to interest. And so you look at that over 20 years, and that's $300,000. So everyone's telling the same story out there. How can I get you another 1%, another 2% on your investment? How much risk can I put into your portfolio before you absolutely hate my guts and walk out of here? That's the story they're hearing. And we tell a different story. We are sharing how they can recoup interest, recoup taxes, put it back into their pocket. And by the way, if they can recoup some of that $300,000, it's not just the $300,000 they have recouped. It is the interest on top of that they will earn now because it's in their pocket. It's in their policy earning that guaranteed rate plus dividends. Okay, so it's compounding. It's more than $100,000 or $200,000. So one of the keys to infinite banking is how we finance our purchases. We're financing any purchase that we can't pay for out of our monthly disposable income. And you either take out a loan to do that, or you save up money in a savings account, and then you can take it out and spend it, and then start putting the money back in. But those both have their drawbacks. I mean, with financing, you get a loan, you go below the zero line, it's called the zero line. You go below the zero line with your $10,000 loan, let's say, and you're making your payments every month to a finance company, and you get back to zero. You pay off the loan, and then you do it again. The saver, he's going to save up $10,000 for his big purchase or her big purchase, and he's going to drain that account, and he's not earning any interest. The interest that he was earning is gone, and he's going to now start to put the money back in. And a lot of people are just spinning their wheels with this strategy. They might put the money back in that they borrowed. They might even put the interest in that they borrowed from their own savings account, but they don't put the compounding back in. It's too hard to catch up. The thing is that both of these concepts cost, if the interest rates are the same, if I'm lending at 5% and earning 5%, so I'm giving up one, and on the one hand, I'm giving up 5%, on the other hand, I'm paying 5%. In either case, if they pay those loans back to themselves, whether they refund the savings account or pay back to the finance company, if all things are equal, the time and the interest rate are the same, the cost is exactly the same. So is there a better way? Is there a third way? Well, there is using collateralizing your asset. And so what you do is, instead of draining money out of an account or a policy, let's say your life insurance policy, you keep the money in the policy, and the life insurance carrier loans you money from the general funds and puts a lien against the cash value in your policy. So sometimes we use the wrong terminology and say, I'm going to take a loan out of my policy. You're not doing that. You're taking a loan against your policy. And the structure of life insurance companies are such that they can put a lien on your policy. It stays in force. It keeps earning that guaranteed rate of return plus dividends. And once you pay that loan off, it's gone. And the client never took themselves off the compounding curve. Albert Einstein once said, compounding is the eighth wonder of the world. So if it's that powerful, how often do we want to interrupt it? Never, right? We want to never interrupt compounding until we actually need to start living out the money and draining the account for retirement, which we can do, which are some great strategies for that as well. But so that's the key. It's not just, using a whole life insurance policy. It's how you use it and how you're able to use it. That is very important. Plus, you have those additional benefits. You have, the life insurance on top of that. You have some other aspects that I'm going to mention just quickly that are also commissionable sales for you. But you have those guarantees. You have the flexibility, especially with mutual trust and our Horizon Value. You have incredible flexibility with design, and we're able to design a policy in as little as 2 payments if you want to, and have it non-MEC. Now, not many people do that, but that just helps to describe the level of flexibility that we have with this policy. So, of course, the gains are tax deferred, and if you access them properly, or you can access all the money tax free. and you maintain that liquidity, access, and control. It's very important. And you know that your kids, your grandkids are going to receive an immediate income tax-free benefit if you're not able to stick around to complete all your great financial plans and things that you want to do. I mean, they're going to be taken care of no matter what happens. And there's no additional fees to it. There's no, there's no special setup fees. There's no red tape. You can get loans in as quick as 10 days. We have clients who send in loan requests with their applications, and then once their policy is funded, their loan is processed. So I mean, it's pretty aggressive the way we do this, and we have a big audience out there for this concept. It really applies to many individuals. Really, I mean, I like to say if you have a household of $70,000 or more, you basically have a client there. But small business owners, doctors, dentists, professionals, they all understand it. Real estate investors really understand the concept and really appreciate it. We have clients who just don't want to deal with red tape. You want to get a loan, you want to build up a pool of capital and have it grow and have other benefits. And then if you need to use the money and you want to just send in a one-page form and get your money in about 10 days or less. 3 days actually is the processing time for a loan. You get your money in about 3 days, and it's guaranteed. You don't have to go and fill out a lending application and get 2 years of your tax returns, and by the time you get all the approval back, the interest rate's gone. I mean, I've been through that. It's ridiculous sometimes, but you don't have to deal with any of that stuff. And it's, for clients who are just looking for a safe alternative to put some additional money. Maybe they're maxed out on some of their other investments, their IRA, their Roth IRA, their 401k, and maybe they're just looking for another place to put some funds and have it, be safe and work for them. The clients do need to be insurable. That is his life insurance, so that's important. And they should have a desire to protect their family, which again, I know there's a lot of families out there like that. So the paid up additions rider is really important, as I mentioned to you before. Now you can go up to, there's a single and an annual, and you can go up to $500,000 premium into that single paid up additions rider. If you want to go higher than that, we can do it on approval. So it's a case by case basis. The flexible paid up additions rider, you can put anywhere from $100 into it up to $100,000. And again, this is a key component of an infinite banking policy. And we generally have a split with a premium of 60% going into the paid up additions rider, 40% going into the base. And that's just how Nelson Nash kind of has always talked about building policies when he was alive. And that's why I like mutual trust, because we take you right up to that MEC limit and not over it. So we keep that tax favored treatment. But you can fund that paid up additions rider at any level, at any time. It doesn't matter what mode you're on. You want to just send a check in and say, put it in my paid up additions rider, you can do that. I've done that many times on my own policy. And then that provides that quick cash value growth, that liquidity that you need, so the client can start using this very quickly to pay off loans. So what we're doing is we're taking, with the infinite banking concept, they will maybe have a credit card that they're paying at 12% or 17% or what have you. We get their policy funded. We find the money, and there's ways to do it. And we fund the policy, and then we take a loan against the policy, and we start paying off that higher interest debt. And you're taking a loan, which our case right now it's 5% is the loan rate, and you're paying off a 12% loan. Now, typically what you want to do as an infinite banking practitioner is you want to make the payment as if you're paying at 12%. So you're paying off that loan more quickly. You're paying off a 5% loan at 12%. That means you're paying off that loan, that 5% loan, more quickly and saving interest. You're recouping that interest that you would have paid to that credit card company, that other financial institution. And so that's really how you can put this on steroids, is just paying off this high debt in a very aggressive way, with not a higher payment, just a lower loan. And then you're able to get out of debt. We have a group that we work with, and you can get with Tony and talk to them, talk to him about it. But we have a group that we work with, and they get people out of debt, all debt, including their mortgage, in 9 years or less, without paying any additional money than they're already paying. And that's the power of this concept. And this group does a fantastic job of implementing that. And And so if you want to learn more about that, like I said, get with Tony. Now we have some additional features on top of that. You have a waiver of premium. So think about this. You get the waiver of premium on your policy, and the client is unable to work, meaning they can't provide the premium that they want to pay into their policy, and they're able to go on this waiver of premium that we have. And so if the client can't do their own occupation, then Mutual Trust pays the premium for them while they're unable to work. So think about that. You have this portion of your retirement plan that is funded no matter whether you can work or not. Okay, and this applies to both the base premium and the paid up additions rider premium that we will fund. And what's really cool is that let's say you have $10,000 in premium you're paying in total. $4,000 is going to the base, $6,000 is going to the paid up additions rider. But let's say the client was having a bad year before they were disabled and they only paid $100 into the paid up additions rider. If they go on to the waiver at that point, even though they were only paying the minimum, Mutual Trust would pay the maximum that they qualify for. That full $6,000 would be funded into the PUA rider, plus their $4,000 base. So it's really a powerful rider and gives you the ability to say, not only are you, going to be able to get out of debt more quickly and build your wealth more quickly, but even if you can't work, this aspect of your retirement plan is going to happen. And so that's just a very powerful set of guarantees, and it lays a foundation for everything else that they're doing outside of that to be more successful. And of course, we have the accelerated death benefit. We also have the chronic illness rider, which allows the client to accelerate the death benefit up to 24% of it each year, on up to $1 million. So they can, if they are, they are certified by their own doctor as being unable to do 2 of the activities of daily living or suffer severe cognitive impairment. That's all they need, and we will accelerate the death benefit to them income tax free, and they can use it for whatever they want. We don't need to see receipts or anything. They just use it for whatever they want. So it's another powerful benefit that they're getting with no additional out-of-pocket expense to them. So we do support the infinite banking concept and other sales concepts as well, but we have a dedicated concept coordinator. His name is Richard Weiserick. Very knowledgeable. He's also our business coordinator. So he is IBC certified, which is a special certification you can get for infinite banking, and just a wealth of knowledge. And we have an estate planning attorney on top of that you have access to for free if you're working on a case with MTL. We have the software to run illustrations to show the clients how the concept works. We have training sessions like this one, and we have sessions on demand on our website that you can go and watch to learn more about this concept and others. We have some marketing materials and things like that. So we really put our money where our mouth is when it comes to selling strategies and sales training. And I hope you've kind of, I'm not trying to make you an expert in this by any means in 20 minutes, but hopefully you've heard enough that your interest is piqued. It is a very popular concept. We've had a tremendous growth with this concept and interest in this concept. Mutual Trust has grown 16% every year the last 3-4 years until obviously the pandemic hit. And we're still doing well, which is very nice. But we're an A-rated company, $6 billion in assets, $1 billion in capital and surplus, A-rated by AM Best and Fitch, and got a lot of stuff going on. Company that really got, like I said, growing 16% in a market that's growing 1%. You're doing something right. So a great time to take a look at Mutual Trust and look at this concept. Infinite banking is a great way to introduce whole life into your practice if you haven't already. And it's a great way to learn about Mutual Trust and what we have to offer. We have many sales concepts we partner with, but infinite banking is by far the most popular and our most successful concept that we partner with. We are going on a trip, but it's not going to be till 2022. So if you sign up, the qualification period started in July of this year and goes through December of next year. So an 18-month qualification period. But we do double your credit the first 4 months. And the ability to earn credit towards this trip is very reasonable to qualify. So I encourage you to take a look. We're going to Ireland in 2022. which I'm sure this whole mess will be over by then, and looking forward to going myself if I qualify. Um, so keep that in mind. It's definitely a nice little kicker. We're not above bribery at all. So keep that in mind. We have other things, rewards that we provide as far as education reimbursement based on production, expenses toward the purchase of a selling system if you buy one of our many selling systems that we partner with. So, I mean, we have a lot of little incentives for you. So I hope you have found this informative, and I really appreciate, again, you taking the time. Infinite banking is a very powerful concept, and definitely one that you can just introduce into your financial practice or into your financial planning practice without giving up everything you've already done to make yourself successful. We want to grow the pie. We're not trying to take business you're already doing. And you can definitely do that with infinite banking. So with that, Tony, I will turn it over to you for any questions.
All right, Kip, we already started having questions come across, so here's the first one. Hang on just a second. All right, so the first question is, how do you determine the max age for a person/family that this might make sense for, multi-generational trust?
So it sometimes you have to just run the numbers and see if it works. You start getting up into the 60s, it can get difficult. Many times we will have clients who will use somebody else in their family as the person to get the insurance on because of the lower cost. So yeah, you kind of have to get up into the 60s. It's getting tough. I would say that's probably the best answer I can give you. But a lot of times you just have to run the numbers and see how it looks.
Okay. All right. Let me see if we have any other questions. All right, here's an easy one for you. Does it cost to use this?
Does it cost to use this? So
Yes.
the infinite banking concept itself has no cost. There is a selling system which I alluded to that does have a cost, but it's well worth it. But it's up to you. I mean, we have advisors who do it all on their own. And as long as you keep it simple, it's very powerful. And then there are others who they want that system, they want that guidance. And they use, there's a couple systems that are out there, and they like that, having that track to run on. And so, yeah, it's up to you whether you want to cost or not to use it.
Okay. And then we do have additional information in regards to that too. So
Yeah.
I can get that out to any of you guys that are looking for additional information regarding that. So next question, what is the rate the policy is paying while the loan is 5%?
So you're going to get a little less than 5% overall. So you get 4% on the cash value plus the dividend. So dividend's going to add, 1.5. But overall, the way we work it is there's going to be a little gap of, you're going to get something less than what you're earning on the loan.
Okay.
Or what you're paying on the loan, sorry.
Gotcha. All right, the next one, I can answer this one for you, Kip. I'll let you take a pass on this one. They're asking, got an agent asking, missed first 30 minutes. Was the program recorded and how can you have access to it? Yes, we are recording this. It will be available on our YouTube channel, meaning the IAMS YouTube channel. But I will be reaching out to everyone that have additional questions, and I'll also reach out to you and make sure that you do get this link to the recorded webinar. So we'll get you taken care of. All right, let me see. Just kind of going through here. Does the interest charge go back into your account?
No. No. So I assume you're talking about the loan interest. So no, when
Yes.
when you take a loan, you are paying mutual trust interest. So it's kind of like an investment for us to give loans, just like a bank. So no, your interest does not go back in your policy.
All right, and this one is specific to IMES that I'll go ahead and answer offline. This is in regards to branding, so the person's asking the branding information. I'll reach out to you regarding that. I think we might be at, I think that's it. That is it. Anything you'd like to add, Kip?
Just thanks again very much. I really appreciate everybody taking the time to learn about this powerful concept, and I hope all of you are going to had a great weekend, and we'll have a fantastic week, and happy selling.
All right. And before you go, Kip, for those of you that would like additional information regarding Mutual Trust Life and Infinite Banking, I do have a polling question that I just put up here. If you can respond to that, I'll make sure to get that information out to you. And it looks like we've got quite a few people that's looking for additional information, Kip, so that's always good.
Great.
I'll leave this up for a few more seconds. And again, I will be following up with everyone that attended. So if you realize that you have questions after the webinar, definitely feel free to let me know. And we'll close this out. And lastly, if you're looking to get appointed with Mutual Trust, get appointed through IMES for Mutual Trust or any other carriers that we work with, I am launching a polling question for that. If you can respond to that, we'll make sure to get you the necessary materials for that. Okay. All right. I'm going to close this down. Looks like everybody has responded. All right. And in closing, if you have any questions in the meantime, feel free to reach out to me. My contact information is here on the screen. Again, my name is Tony Butler. My email address is tony@imesinc.com, or you can reach out to Jess Riley. His email address is jess@imesinc.com, or you can give us a call here at 800-255-5055 and just request to speak to someone in the life sales department. I want to thank everyone for joining our webinar today. Everyone, please stay safe, and we look forward to talking to you next week. Have a great week, everybody.
Thanks, everybody.